Hello, and welcome to Explain the Charts. Today, March 18th, 2025, we're analyzing the USDCHF, taking into account both recent news and the chart data. We'll start by summarizing some current events. Several news sources highlight market volatility, influenced by factors like potential tariff threats and fluctuating economic data. We've seen concerns about the U.S. economy due to lower-than-expected retail sales, as well as rising inflation expectations. Keep in mind that events like these can impact currency valuations, so understanding them is key. Pictet forecasts franc depreciation against the dollar, but strength against the euro in 2025. Let's jump into the charts and see what they suggest. Let's take a look at the daily chart first, giving us a broader view of USDCHF's movement. Zooming in on the last several months, we observe a period of consolidation followed by a recent dip. We need to consider the potential impact of SNB policies on the Swiss franc, especially since they are expected to be slower to ease policy than other central banks. This can potentially lead to upward pressure on the franc. The dollar has also been affected by recent macroeconomic news, so this USDCHF pair can react to the US news also. If we look at the 1-hour chart, we can see more short-term volatility. Currently, the price seems to be trending downwards, perhaps reacting to the overall market uncertainty. We have to also consider that 70% of IG client accounts with positions in this market are currently long, while 30% are short, according to one report. This may mean that there is more downside than upside currently. Let's examine this further by zooming in on the last few days. The pair is currently around 0.881. The next area of support appears to be around 0.88 and resistance around 0.884. Taking a closer look with the 15-minute chart, we can see how choppy the price action has been recently. There hasn't been a lot of decisive direction, however it seems like the next few days will be choppy and likely downtrending, although the exact price target is uncertain. Goldman Sachs' 2025 stock market downgrade may have played a role. Also, any tariffs will affect the forecasts. To recap, the important price levels to watch are around 0.88 and 0.884. A break below 0.88 could signal further downside, while a move above 0.884 might indicate a short-term bullish reversal. Keep an eye on upcoming economic releases from both the US and Switzerland, as these will definitely inject volatility. The likelihood of a significant upward trend is relatively low at this time, given the current market sentiment and Pictet's projections. A downward trend seems more probable, but watch for key levels of support to hold. If the tariffs aren't enacted, then it would be a better chance that the prices rally, otherwise a dump might be on the horizon. That's all for today's analysis on Explain the Charts. Happy trading!